Hey there, it's Chris, and with all the hype and everything going on, I thought I would just present some three ideas for you to think about here. Like, is it all over? Is the market crashing? Is crypto done? Have I lost quadrillions of dollars? And should I freak out about the price of crypto today? If you look at the news, there are a lot of visceral things out there calling it a bloodbath or how things keep crashing or it's a demolition, right? Which triggers all kinds of responses of fear in our brains. There's a reason those headlines say that, which I'll go over in a moment, but the news can be overwhelming. It can make it really scary and unknown. So I want to cut through some of that and give you three things just to think about so you can make your own decisions. And my premise is we might all be okay. Now, you might have a premise that we're doomed and you want to turn this off right away. That's fine. I respect that. But here's three things to think about and why we might all be okay. First off, fear sells, and honestly, we buy it. So it's not just those selling it that we often villainize, sometimes news media, advertisers, what have you. We buy it as humans too. So we're part of the mix. It's also a very dangerous pattern for our brains, which I'll tell you about, but it's addictive. It's almost like an addictive chemical. So fear sells, and it might be sticking a lot right now. Crypto in particular is reacting to market patterns. It's not magic or make believe or things that are unknown. It's reacting to patterns in a predictable way. That can give us some comfort, which I'll talk about in a moment as well. And lastly, crazy quote unquote people have made quite a bit of money finding the opportunity when markets crash. I'll talk about some specific market crashes and people that have done well. Again, your mileage may vary. This might not be for you, but I just want to give you three things to think about and maybe cut through some of the fear that's out there and a lot of the drama. So fear sells and we buy it. Okay, we're part of this mix too. What happens is there's a visceral headline. There's literally tools that help people write these headlines so that you get clicks. There's a reason that they're done that way. Okay, for decades now, much of our news has become what I will call infotainment, right? It's there to help sell ads. We click and buy on those ads. We're part of it as well. And that cycle continues. So there's this visceral headline you see in your news feed or on YouTube, or you see a news story coming up. It gets you excited and maybe it's fearful and there's a lot of dramatic language. You click or watch that thing. We're humans and we do it. Okay? That audience creates ad buyers. Okay? There's enough ads that people click on and buy that it makes it profitable for those advertisers to fund more of the same, and the cycle continues. So when things go bad or even slightly bad, you'll see a lot of fear cells type things happening because it triggers something in our brains, a very primitive part of our brains where fight, flight, and freeze are in the very base of our brain, and we act on that and can even get stuck there. Fear also locks out everything. It's a very dangerous pattern. It can keep you stuck. When we're in fight, flight, or freeze, literally the other parts of our brain, collaboration, problem solving, all those things are off, completely off. So again, it activates that primitive fight, flight, freeze, and you can stay stuck there. Even if there's not a bear about to eat you, or you're going to get run over by a truck, or you think you're going to lose everything you have and be destitute, right? Your brain is going to fire chemicals like it's that way and may keep you stuck there. During that time, you're not able to access things to get you out of there easily. It's like a power outage in your city. Flipping the light switch on and off doesn't help. Now, I know many of you have generators and what have you. For those of you that don't, flipping that light switch on and off isn't going to do anything. It feeds on itself and repeats. Your brain's going to say, hey, see, this is scary. Hey, see, this is scary. And you can stay stuck there. What's also really interesting is people can begin to do what I call negative agreements. I'll show you the term coined by an organization called Quantum Learning. But negative agreements are, oh yeah, that sucks. Yeah, that sucks. I agree that sucks, right? A lot of us did that in junior high, and a lot of us still do that today. We just agree on everything that sucks. It's really hard. It's kind of interesting. If you're excited or happy about something, a lot of us are afraid to share that because it's more popular to talk about the things that suck. Okay, the way to break through that, I'm not going to do a whole lecture on this, but is empathy, having others really hear you out, really hearing others out, and being grateful. That breaks through that stuff. It breaks the fear pattern. It gets you back in a place where you can imagine a way out. You can problem solve and collaborate. But breaking free takes effort and courage. In the meantime, that fear is locking out all sorts of things. Crypto is reacting to events. This should be number three, and it should be number two. It's not magic, it's predictable patterns. I got afraid that I did the wrong thing. So even in tragedy, some predictability sometimes makes it easier. I'll give you an example. Like if you have a medical diagnosis and you don't know what's going on, and that time before you know what's going on, even if it's bad news, it's scarier than when you have the bad news of what that bad medical condition is for you or a loved one, and then you can make a plan. When it's unpredictable, you can't make a plan. There are humans involved in crypto, so no market is immune. A lot of us thought, oh, crypto will be immune from everything. No, there are humans involved. We tend to do human things like get scared. Interest rates, when they increased, all the markets dropped, including crypto. That is a predictable event. And inflation rate was announced. Markets dropped. Crypto also dropped. That's a predictable event. This isn't magic or some mystery. Now, there's a multiplier effect because crypto is considered a speculative investment. So if things drop, it's going to drop more. If things go up, it's going to go up more, right? So you can play that to your favor, but do expect when there's news and information and events that come out that affect normal markets, they're going to affect crypto too. It is not completely immune because we're humans, okay? Here's number 3. Historic market dips. I want to go through some historic stuff here. My source is Motley Fool, thank you. And what caused them, all right? Just so we can zoom out here a little bit, as people like to say, and look at things. So everyone knows about the 1929 crash. That cause was excessive leverage. People were buying more than they really had money to buy with. There were margin calls. There was no money to buy on, and everything collapsed, right? House of cards, what have you. Took a long time to recover from that. Really, 1950s is when that recovered. And that was a big, big crash. In 1987, the year I graduated high school, which will date me, there's Black Monday. Now, that was a mix of factors, but one of the factors were it was the first time that there were some bad algorithms, some computer algorithms that humans programmed that accelerated buying and selling patterns and made the markets panic and fear. Now, there was also issues with the Cold War and trade embargoes and price of gas and a variety of other things, but there were a mix of factors in Black Monday with that crash. The dot-com bubble, right? They're overvalued internet assets, things that weren't producing any revenue at all were valued in the billions, and they crashed because there was no real value there. Financial crisis of 2008. So that was the housing bubble where you could buy a house with almost no proof of anything. The interest rate was way lower than they really had to pay, and it's just a matter of time when that collapsed. Now, a couple really quick things here. The dot-com bubble did not erase the internet, right? Did not erase mobile phones, did not erase innovation. It did not end it all. The financial crisis did not end us buying homes or the housing market doing well, right? That continued, as do banks and all the firms on Wall Street. In 2020, the coronavirus crash, right, with the pandemic shutting down everything for a time worldwide, that of course had economic impact. So those are some historic market dips, just so you know that this has a pattern. And by the way, a lot of us forget that this has a pattern. We're used to like these booming times or slow booming times. And when a crash comes, we freak out. Okay, there's seasons, right? We don't freak out usually when fall or winter comes. We know that the trees are going to drop leaves, and we know when spring comes, they're going to have more growth, right? And that pattern continues. Now, it's not exactly the same in the markets, I know, but there are growth times, there are growth seasons, and there are seasons when things aren't growing as much. And the roots are growing, and then they grow more, right? There's a pattern, a boom and bust pattern that happens here. It is a pattern. We will get through it. There are a lot of profits made during these times. This source is Investopia. I really recommend, this is not financial advice. I'm not telling you to go buy a bunch of stuff, but I just want to give you some comfort that in these quote unquote crazy times, some quote unquote crazy people have done really, really well. It is not the end of things. So Warren Buffett, of course, is well known for his conservative growth and how well he's done. But, during the 2008 crash, right after it, he bought Goldman Sachs and GE. They were trading at very low volumes. A lot of folks thought, oh my gosh, all these things are going to fail. And he gained many billions. Jamie Dimon from JP Morgan, now not an individual investor, but as part of his work at JP Morgan, bought a bank and a financial house that were upside down and gained 3 times his money back. Now, that was not a popular thing to do at his time. It'd be like buying tons and tons of Bitcoin right now. He'd be saying, oh, are you crazy? I don't know. Are you? John Paulson, he had multiple investments in industries that collapsed after 2008 and gained over $15 billion of new wealth for his firm. And Carl bought a property. He's a well-known story here. Actually sold a property before the 2008 crash, a few years before, property in Las Vegas dropped to a tiny amount. It was 155 million, tiny by Vegas standards, and quickly went back 4 times to 600 million. And that was a crazy time to buy. That property was around, I believe, 4% of its value. People were like, "What are you doing buying in Vegas? No one's going to Vegas. This thing's going to go under." Well, it didn't, and a few years later, he's 4x'd his money. So profits are made during these times. That's the only point I want to make here. Are we overreacting? Right? Is things really crashing as bad as we think? Maybe, right? Maybe. My encouragement here is to get calm, to get out of that fear cycle. If you're reading lots of news stories that are telling you it's over, maybe read less of those. Be smart, get calm, whatever that is for you, and use your awesome brain. Okay? If you feel yourself like stuck or fearful or all that, this part of your brain, your cerebral cortex, isn't on, and it has a lot of capabilities to help you out. Remember, crypto is considered speculative. It should not be your 100% of your investment, like any speculative investment, right? I'm not saying crypto is bad. I have crypto. I like crypto, but it's speculative. So those highs and lows are accelerated. When the market's doing well, it's going to do that much better. When the markets are low, it's going to do that much worse. That's a bigger spread to play with if you know what you're doing, but it can also be painful, right? When it goes down more than other things, and that can be scary. That's a normal human reaction to have. You just don't want to stay stuck there. Not all crypto projects are equal. There are many thousands of projects, and many people are new to crypto and don't understand it's not just one thing. It's not just a McDonald's, right? It's many, many, many different restaurants. That's probably a bad example. Some of them, just like the .com, will make it, and some won't. There are many thousands of things here. So just realize, just like the .com boom, and there's many hundreds of internet companies doing phenomenally well to this day, but not all of them made it, and not all of them should, and that's just part of the cycle. Don't believe the hype, right? Great lyric from a great song in the '80s, but don't believe the hype. That hype is used to sell eyeballs. Those eyeballs are used to sell ad space. That ad space is used to things that we buy. We're part of that cycle, so don't blame the media or anyone else. We're part of it, okay? But just realize there's a cycle there. It can be super addictive. If there's a super visceral article, then be careful if that's all you're reading, is all I have to say. Get with your trusted financial advisor, okay? I am not one, I'm not offering you that, but get with someone you know and trust to think through this all the way. And then just realize too, if you are a crypto person like me, or you've just started to dip your foot and you're really frightened, the adoption of crypto is massive. So this dive in price due to some market factors is not the end of it. There are many hundreds and hundreds and hundreds of billions of dollars yet to be gained in this. There are well over 300 million people on the planet invested in crypto, and that's growing to at least probably a billion people by folks that I know and trust telling me that over the next years. We're going through a storm, right? Storms stink, they cause a lot of devastation, but they pass, and they don't stay forever. Just like the seasons that we're experiencing here, late spring going into summer, don't last forever. So it's a rough season. Hang on. Be smart. If you catch yourself in a fearful state or a panic state, get yourself out of that before you make decisions, and talk to your trusted financial advisors in your life. Now, spoiler alert, or maybe not spoiler alert, it's the end here, but it's not over. Crypto is still going and will keep going for some time, more than probably we can even understand. I believe in holding. In the crypto world, it's called HODL, which was a misspelling, but now it's become a very enamored saying for hold on for dear life. But we're not holding on for dear life. There's huge upside here in crypto. There's a lot of opportunity for it to integrate with everything we already have. It will disrupt some other things, and that's normal. That's part of growth in life. So I encourage you, friends, do whatever you can to get calm, understand this storm will pass, get with your trusted financial advisor, but also realize there may be some opportunity here. Take care, and I hope this finds you well.